Good evening, everyone. While we wait for more people to join in, let me share with you our unit trust platform fee waiver promotion. From now to 30th June 2026, enjoy zero platform fee on all your unit trust holdings. To find out more, please scan the QR code or reach out to your trading representative. Details of this promotion can also be found on our website utrade.com.sg. We are also now on Telegram. Do remember to join our channel UOB Kay Trading Ideas for the latest market insights and promotions simply by scanning the QR code. This evening, we'll be hearing from Paul and superstar analyst guest speaker Dan Ives. They will be sharing valuable insights on the US market and how markets are shifting in response to earnings and tariffs. There will be a short Q&A session after the presentation. Feel free to send us your questions by the chat box. We will also appreciate if you could take a few minutes of your time to complete the survey form that will pop up after this session ends. Without further ado, I'll hand the time over to Paul. Thank you.
Okay, the name of Dan's firm, which is Wedbush Securities. So I need to do a call out to some of Dan's colleagues at Wedbush who were kind enough to volunteer him to appear on one of our webinars. So let's keep going here. Okay, let's go. And there's the picture of Dan and me. There's me again. There's Dan again. And as I said, thank you to Wedbush Securities for volunteering Dan to join us today. Here again, as like Belinda said, is our QR codes for the Telegram channel. You know, as I say every time, please put that on your phone, the Telegram trading ideas, because it reminds you all the stuff we're doing, but also turn the notifications off because we do so much stuff, your phone will be going crazy. Okay, yes, I do these weekly videos. They're pretty popular. Please sign on to them because I enjoy doing them. And if no one watches yet, and if I start losing popularity, management here will tell me to stop. Okay. Dan Ives, very famous. I don't think I need to give an introduction, but for the few people who don't know who he is, he was recently in the news because after giving some suggestions to Elon Musk about how Tesla should be run, Elon tweeted to him or X'd to him to shut up. So that was pretty exciting probably for Dan to be told shut up by Elon Musk. Before we, Dan and I didn't get a chance to really go over the agenda today, so I'm going to do it right now so he can hear it, so he doesn't get confused and you guys can follow along. I'm going to talk a little bit. Don't worry, I'm not going to talk for long because I know that everyone wants a lot of time for questions to Dan. After I talk a little bit, I'm going to ask Dan a question. After that question, I'm going to talk again. Then I'm going to ask him a bunch of more questions, and then's got to be the Q&A. Okay, I hope you all followed that. Okay, just general look at the market. We've had a couple of down days, but the US market is still pretty close to an all-time high. I just wanted, this is sort of my angle on the inflation story. Yes, inflation, as you can see on this thing, is ticking up because of the tariffs, but there's a lot of reasons to believe that once the impact of the tariffs are in there, inflation will drop, and that'll allow the Fed to aggressively cut rates as Donald Trump wants. If you look at the chart on the right, I kind of like asked ChatGPT to follow, if we're following Dan's a big AI person, I asked it, are there very many times in American history where we've had an inflation problem and real estate prices have been dropping? And the answer from ChatGPT is no, that really doesn't happen. If you look at the chart on the right, because it's going up, it would seem like real estate prices are going up, but this chart actually represents the number of counties or the percent of counties across the United States that are reporting falling real estate prices. And as you can see, even during the GFC, that number only went up to 60%, and here we are above 30% today. Just going over the last earnings reporting season, part of the reason we're at an all-time high is going into earnings reporting season, the average analyst said that S&P earnings growth was going to be 4.9%. That means, like, if you look at the analyst for Amazon, he has his prediction for what Amazon does, and the people at FactSet just add all that stuff up to a weighted average, and they come up with what the S&P earnings growth is going to be. So based on what the analysts, sort of like analysts like Dan Ives says, at the beginning on June the 30th, they were predicting 4.9% growth. And as of August 8th, the second quarter earnings growth was 11.8%, which is a lot higher than expected. And if you look at the left-hand version of this chart here, what you see is that the communication services, which is where Meta, Facebook is, which is where Alphabet, Google is, they had the highest growth, and then the tech stocks, the second highest growth. I'll skip this slide for, in the interest of brevity, except just to say that the analysts are also predicting pretty good earnings growth for the third quarter. Historically, as you get closer to earnings, they write down the earnings estimates. That's what it says on the left. But then when the earnings come out, they beat. So we could very well have our fourth consecutive quarter when we get into third quarter earnings of double-digit earnings growth. So that's another reason why the U.S. market is sort of at near an all-time high. Okay, and you can see also when everyone's talking about those big tech stocks, if you ask who was beating on earnings the most, it was the big tech stocks. So you can see the blue lines. Analysts were expecting the big Mag 7 stocks to grow their earnings by 14%. They grew their earnings by 25.7%. I'll let Dan comment on that, but when you consider how gigantic those companies are and that they're growing their earnings at that pace year on year, that is really amazing. But also it's kind of nice to see that the other companies are also growing their earnings, albeit at a slower pace, but they did beat their earnings estimates and are producing good earnings growth. So at least looking in the rearview mirror, everything's going really well in the US. This is a great chart because it talks about, how the two biggest stocks in the US over a long time, you can see, is now NVIDIA and Microsoft, and those two stocks by themselves are now 15.4% of the market cap of the S&P. And that's much higher than historically the two largest stocks have been. And also in terms of this way, and here's the first question for Dan, is you can see the Mag 7 have pretty much the same market cap as the bottom 433 stocks in the S&P. So the question is, should this market concentration, is that something that investors should be worried about, Dan?
Yeah, and first, thanks for having me. Thanks everyone for joining. In my opinion, this is just the start of the AI revolution spreading to the rest of tech. So now it's more concentrated, but our whole thesis, and we talk about in the Ives AI 30, obviously have an ETF, based on the research. It's about the derivatives, second, third, fourth derivatives. But look, to me, if you think about this like a party, the AI party started at 9 p.m. It's now 10 p.m. Party goes to 4 a.m. And we're going to have trillions of spend over the coming years that, in my opinion, is still being underestimated, which is why I think we're in a tech bull market next 2 to 3 years.
Okay. So just to repeat, like a lot of times Dan is quoted with a baseball analogy. And just to let you all know that, Dan, you stop me if I get it wrong, but a baseball game has 9 innings. And I think, Dan, you've been quoted as saying we're still in the second inning.
Yeah, bottom of the second inning. So think
bottom
about
of the second.
Bottom of the second. That's where we are.
So he's basically saying we're less than a third of the way through this. Okay, so don't be.
Paul, let me just add, It's like somebody myself that's covered tech stocks 25, going back to dot-com bubble and burst, financial crisis, and obviously to where we are today. A lot of times, like the comparison, like dot-com bubble, is it a similar thing? And I just view it like we're talking about dramatically different worlds because of the use cases, the spend, what we're seeing, just even on big tech. But you haven't even seen enterprises, sovereigns, global get into what I believe is going to be this arms race that plays out, in my opinion, over the next 7, 8, 9 years, especially when you think about autonomous, physical AI, and ultimately really the future.
Okay. So this is kind of a different topic for a second, that the latest change in the world of ETFs is sort of like, an analyst ETF. So you can see one of another famous analyst, Fundstrat's Tom Lee. He started his own ETF called the Granny ETF, and you can see that it got 2 billion in AUM in less than 9 months. And you can, and I'm not going to go over the pros and cons of his ETF. I'll just point out that the way these are structured, because he is an analyst, he can't manage the ETF. So there's another person within his firm or out sort of separate from the firm who monitors his recommendations and builds the portfolio based on what he suggests. And for regulatory reasons, if another analyst with the like Dan has an ETF, kind of following him, he's unable to comment or talk about it on this webinar. But that's why I put this on, just to sort of let you know that there there is a way to follow the Dan's recommendations
Yeah.
if you kind of do some Googling.
And Paul, I would just say, just to that point, even though like I can't talk about my ETF per se, it's all based on, which I can talk about, the Ives AI 30 report. And remember, the whole point of this is 2023, 2024, the trade was basically just own big tech, own Nvidia, Palantir. I mean, it was a very clear trade in my view. But it's also my view that like, you still continue to own those names in size, but it's about the derivative. So we have second, third, fourth derivatives. So we have an AI 30 where, and you could check it out online, whether it's like software, chips, whether it's consumer, Meta, Alphabet, others, cybersecurity, the power plays, autonomous. Because it's my view, it goes back to your first question. It's not just about concentrated. It's about second, third, fourth derivatives. For every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. And it speaks to my view. That's why, despite some of these white knuckles, tech stocks selling off the last day or two, why the bears that are living in hibernation mode, they're living in their caves, the bears, these days, right, they come out of hibernation mode and they try to spark nervousness. But the reason so many of the bears have missed every transformational tech stock the last 20 years, because if you focus just on valuation over the next year, you've missed every single one of them.
Okay, since we have this slide up there, and we have, looking at
And
some of his
Tom
top,
being a good Tom being a good friend of mine.
yeah.
I mean, the one thing I could say, me and Tom, like, we view things very similarly. Like, we view the world through a similar lens. Because I think the view is like, if you get caught up in some of the near term noise, macro, technicals, Fed, whatever it may be, geopolitical, I think you miss like forest through the trees. And it's the view like we are in what's going to be a tech bull market for the next 3 years. I mean, that is at the core of our whole thesis. And it started off as a 5 to 6 year bull market back in 2022, when we sort of made the call.
Okay, since we have this screen up here and we have a bunch of stocks up there, that's Tom's Biggs Holdings.
Mm-hmm.
I'll just throw out one of the stocks
Sure.
on this list that we're most likely to get a question from our clients on, which is Oracle.
Yeah.
And I'll set up the question by saying, not that long ago, right? Maybe COVID time or a little before, one of the EAMs here in town had a reception. Dan, just to let you know, EAM is the abbreviation for RIA, is the
Yep.
equivalent of an RIA in the US. And the EAM, one of their clients was a person who had worked for Oracle for many years in Singapore. And that person, I was asking, well, how's Oracle doing? And he said, oh, and he was so negative. He was talking about the old Siebold Systems
Yeah.
business, negative. He was talking about Java was over with. And, and here we are, not too, in a very short period of time, all of a sudden Oracle's a happening stock. So do you
Yeah.
think this is
And
really has legs or what?
and Oracle, one of our top AI 30, Ives AI 30 names. I mean, the reason we've been pounding the table on Oracle and continue, to me, it's about the stack. When you look what Oracle's done, given their install base, they're taking a page out of Microsoft's playbook. And more, the AI monetization, you're basically going to see another Oracle created within the company, which is AI driven. And that's kind of our view, is that like what you're seeing with Oracle, they've done, I think, the right things organically that took time, done obviously some acquisitions, and I think they're going to do some more. But Oracle, I mean, we believe Oracle has another 30-40% upside here, given our view when the derivatives play out and the use cases play out. It's Oracle, it's Microsoft, it's AWS, it's, of course, Alphabet when it comes to Google, GCP. And I even think names like, look, IBM's another example of a name that I think clearly benefits as well. And that's been a bullish, call of ours because of the install base.
Do you think Oracle has any particular advantage in that it doesn't compete with a lot of, the clients?
Look, I think first of all, their main advantage is the install base. Another huge advantage is being more neutral-ish. Definitely gives them a huge advantage, especially as you have more of these hybrid cloud environments, right? Whether like so many enterprise that we say you have massive AI deployments, you have you have Azure on some, you have GCP on others, you have AWS and Oracle is going to play a huge role there. I mean, if you think about how this is all playing, that layer that Oracle plays is going to become a bigger piece of the spending, and that's a core part of why they're one of our core Ives AI 30 names.
Okay, let's keep going here. So I already went through this and said besides the celebrity ETFs, there's also copycat ETFs. And the reason I wanted to put this slide is for our September um, webinar, the ETF manager that will be joining us is one of the ones who does a Warren Buffett ETF. So if you're interested
Yeah,
in
and
Warren
I
Buffett,
know him well. That guy. Yeah,
okay,
that
Dan knows him. Yeah.
that'll be a really interesting one because I've done podcasts with it. He's really super interesting.
Okay, so there's an endorsement for you. So join our September webinar if you're interested in Warren Buffett. Okay, this slide I just put in there. Like I said, I did a little poll of our sales staff here, and most of them, Dan, you're famous in Singapore. Most of them know who Dan Ives is. A few didn't. So I just put in this slide here for the ones who didn't to kind of give them a little bit of background of things that Dan has said very recently in the press. So you
Yeah.
see Microsoft
And
hitting 5 trillion. Dan, yeah?
no, and I would just say like on the Musk stuff that you brought up before, and obviously knowing Elon, from the beginning, knew no, like he obviously would take exception, to criticism. But look, the way that we do things, like when I feel like Musk is going off track, I'm gonna say something because to me, like Tesla, it's the biggest. This is the biggest growth opportunity they've ever had in terms of autonomous, in terms of Optimus and robotics. And the last thing I want to see is like him keep getting into the political angle, which really creates just more and more noise. And that's why that was something that I needed to basically, kind of preach to the board and to Musk. But look, I've done the same thing. Like if you look at like Apple the last like week or two, it's like to me, when it comes to AI, like Apple's nowhere. And to get to what I view as a $350, $400 stock, they have to do an acquisition. They got to do Perplexity. They got to make some big bets. This can't continue to be just this backward treadmill approach that Cook's taking. They need criticism. And look, and that's my style, right? Like when I'm bullish on names, I'm going to speak out when they have to, change course, I think.
Okay. So I'll just to let you know, if some of you people who follow Dan Ives, that there is a website you can go to where you can order Dan Ives clothing, his clothing line. And now I'm going to leave this slide up here because obviously with Dan as our guest, we know that most of you want to ask questions about your
Yeah,
favorite U.S. stocks. But um, what I kind of before we got into that, I wanted to ask Dan a couple of questions about Asia because
cool.
obviously we're an Asian firm and
Yeah,
Asia's our place. So here are the questions on the screen, and I'll let Dan
yeah,
just
sure.
go into them and give his thoughts.
Yeah. So first, like on question one, look to me, first, like when it comes like to Trump tariffs, a lot of the new, like we just continue to kind of view this. This is all a game of like high stakes poker. So when things, when headlines hit, it's very easy to react negatively. 100% tariff, chips, 200%, 300. Look, our fundamental view is that like the reality is like, and I spent a lot of time in DC last few months. Like, the administration recognizes like U.S. has to sell into China. That's why Nvidia, it's a pay to play model, right? For Nvidia, AMD, you got to have access to China. Can't give a Huawei and a silver platter that business, and I think that would basically accelerate a lot of China's efforts. But it's my view, this is not this is not just US story. Like, look, that's why even in our AI 30, we have like Baidu, Alibaba. I mean, the point is like you're going to have massive growth in China as well. But I do believe it's very bullish that you've now reopened China. And I think you're going to see positive on talks between US and China. And that's a continued positive for the market, especially US tech when it comes to NVIDIA, the hyperscalers, as well as names like Palantir. Um, what I'd say on number two, how critical powerhouse like TSMC, one of our favorite names. Look, I think the reality is like it's a fairy tale that US is going to build at scale chip supply chain in the US. Now I'm not saying there's not going to be things like we have AI build outs, you're going to have a lot more innovation, but the reality that's going to continue to be in Asia. It's going to be cemented there. I do think it's very easy to get caught with like some of the noise in politics. I think that's how we navigated, a lot, especially since April, with investors. You gotta not necessarily like what's fictional and what's non-fictional, but the reality is supply chain is going to continue to be cemented in Asia. And I think even like when we think about names like SK and Korea on the memory side, TSMC, we continue to be super bullish on Broadcom, Intel. We wouldn't touch with a 10-foot pole. I mean, until they strategically break up, despite obviously, some of the recent news with SoftBank and U.S. government. But so look, our thesis is we own the winners, we own the themes, we don't get caught up in the noise that it's very easy to, especially given a lot of the headline stuff coming out of DC. In terms of, robotics and automation, look, I think specifically Japan and South Korea are going to play a very significant role in robotics. We actually talked to like a lot of private companies that we work with in both areas as well as throughout Asia. I mean, hey, look, it's our view when we talk about AI, the holy grail is going to be around robotics, humanoids, and what my view is in terms of like true autonomous, as we get to level 4 autonomous. And that's why I don't just view the winners as like Nvidia and ultimately Tesla. I think this is going to be just a massive catalyst globally that we're going to see, especially on robotics. And clearly that's going to be a huge positive for Asia. There's so many private companies, and I think even public, that are going to participate in that. And robotics is probably one of the areas when it comes to AI that we're most bullish on when I think about the whole opportunity. Look, stop. And also I want to, on Q&A, we're going to go through all different stocks that we're bullish on. But look, overall, let me just give like a few minutes. My view is like, and we'll see with NVIDIA next week in terms of earnings. I believe demand and supply is anywhere from 10 to 12 to 1 for their chips. There's one chip in the world fueling the AI revolution. So it's my view, like, it's not a question in our view, if like NVIDIA is like a $5 trillion market cap, right? We talk about 4 trillion. It's our view, streets underestimating growth by probably 30% next 2 or 3 years. I still actually view NVIDIA as like a cheap stock relative to what I view as the growth. And I don't look AMD, which are bullish on as well, is clearly going to benefit. But when you look at the pure math and where this is all heading, we're still in the early days because it's still only really U.S. centric. You obviously have AI in China. AI in Asia outside China is minimal. Europe, zero. Middle East just starting. And sovereigns in terms of governments. And that's going to be led by NVIDIA. We're very bullish on hyperscalers in terms of Microsoft, Amazon, as well as Alphabet. I mean, you still have 35% of workloads that have ultimately gone down this path. The vast majority, 50, 60%, are still going to happen in the next few years because it's accelerating the shift to cloud. It's accelerating the stack. It's accelerating the spending. And that's why, look, you're seeing it on Oracle. I think you've seen it on IBM as well. I think if there's a negative, look, it's like right now, software is massively in the penalty box. I think Adobe being clearly like front and center because AI, I wouldn't say eating their lunch, but like they have clearly underestimated how quick this innovation curve is going to happen. Salesforce, I believe Salesforce and Benioff, they will have a massive opportunity when it comes to their install base, and we're bullish on it. But no doubt, like, it has caught them, I think, by surprise, sales cycles. And that's why, I think Adobe being one, but especially Salesforce being two, names where software has been massively under pressure. And we just took Adobe out of our AI 30 earlier this week. I think cybersecurity is an area that was really bullish on. Palo Alto, CrowdStrike, Zscaler. It was CyberArk, but that obviously got bought by Palo Alto. Because it's my view, it's not just about the software names and even names like Snowflake, Datadog. But when you think about cybersecurity, you're going to need to more and more protect the workloads that are in the cloud. And as that shift continues to happen, and I don't think AI is really tacked into a lot of cybersecurity names. But then, and it speaks to like my whole view of AI. It's like chips, where TSMC, AMD, Broadcom, obviously NVIDIA, software, cybersecurity. But then when I think about, to me, like I think Tesla, along with NVIDIA, is probably the best pure AI name. Clearly under pressure in terms of EV demand and deliveries. But I continue to view Tesla as like the whole opportunity is around robotaxis. Our team was in Austin, the first day when it launched. And that's going to launch to what, 30, 35 cities in the US and eventually globally. It's my view like 20% of transportation is going to be autonomous in the next 4 years. Tesla at scale, I believe, is also a threat to names like Uber because of the economics of ride sharing. I believe it's going to massively change the market in terms of everything they were doing. That's why I believe like the autonomous piece alone is worth $1 trillion to Tesla. We believe 2 trillion is the core valuation for Tesla today. Now, again, I get, some will argue that, but I've never viewed Tesla as a automotive company. I view them as disruptive tech. And when I think about physical AI plays, I view Tesla and NVIDIA, the two best physical AI plays in the market. But even when you think about the next piece of the AI third, it's about power, right? Like Akko has been a core name that we're bullish on. Nuclear, obviously a Sam Altman name, that nuclear is going to have to be key to fueling the AI revolution. But then we have names like GE Vernova and that we just added in terms of like another power play. Nebius is a name that we're bullish on in terms of infrastructure stack. But these are good examples. Like a year ago, we wouldn't really, maybe we were talking about it, but now more and more investor focus on, okay, like I get the big tech plays. Who's here? Who's here? Who's here? It's all part of the derivative play, right? Like, it's like, I think we're going to be talking about NASDAQ 25,000, NASDAQ 30,000 next 3-4 years. I'm not saying we're not going to have bumps in the road, but we're talking about fourth industrial revolution that's playing out. So, Paul, I just want to hit that, and then, I want to open up to all like Q&A. I like these things to be really interactive. There's no
Yep,
bad
you're
question.
doing great, Dan. So I'm just gonna make a few quick comments on your comments. Like the first thing I was thinking when I said if next time Dan comes to Singapore,
Yeah, and I'll be
I would
there
like
in
him to.
October.
I said I'd like to take him to visit one of our Singapore tailors so he could add to his collection. But since after he was just talking about AI in Asia, if he really had time, I'd like to take him to Johor Bahru, where he could see the build out of data centers just outside of Singapore, which I think would probably be, if he wasn't aware what's going on, would be
Yeah,
eye
I'm aware.
opening
Yeah,
for him.
yeah, I know that. Well, and I'm in Singapore a few times a year. And again, one thing like on the shirts, like yeah, it's danivesclothing.com. That's a collab with a Brooklyn designer, Snow Milk. They also do stuff with Djokovic and others. So I'm super excited about that launch. Yeah, Paul, I could see you in one of those shirts, man. That could fit you well, Singapore. Going to C'est La
Uh,
Vie. Yeah, I think that could be your outfit.
Okay, so we already hit this. The one thing that I wanted to say, because we did ask the question about robotics, that we have Kay Hian here. We have a buy on a Chinese robotics company, Horizon Robotics. So if any of our clients are interested in that, they're on the call. They should ask their representative for the piece of research. Okay, so now
Great.
to go, before we get into the Q&A, just to put some cold water or devil's advocate into the conversation.
The haters hate the
That
Bears. Yeah, the
yes,
haters.
yes.
Yeah, of course, dude. Look, just because you wear a bow tie and you've been negative on the market for 30 years. I mean, like, look, the whole point is like, I always view it like haters hate, right? The Bears in hibernation mode, wearing the Peter Millars, and I like Peter Millar, but like they can't find AI in the spreadsheets, right? So it's my view, like they will continue to be skeptics in what I view as the biggest tech trend we've seen in the last 40, 50 years. It's a fourth industrial revolution that we're living in. And I get all the skeptics and the haters, but they don't see it. And they never have, right? Like in other words, like just as covering tech, for decades, like I've seen it. And it's just one where that creates opportunities, it creates the market, And I love having bears because it just creates more and more noise and more opportunity for the bulls.
Okay, so I'm turning off my thing, and you should be able to see, yes, everybody at home should be able to see Dan and me. And I am now clicking on the questions.
Yeah.
And just to let you know, even though we have a very big group tonight, we don't have that many questions. So you guys have the opportunity to ask Dan a
Yeah,
question if you type it
and
in.
ask anything. Any name, anything, make this like as fun and interactive as possible. But
Okay, so the first question um, is, uh, what it's from someone who's basically saying he's even after the recent correction in Palantir, I'm not even sure it's a correction. I guess it is. It still has a very high PE ratio. So, do you, where do you stand? I guess he's ending it more or less by saying, where do you stand on
sure,
Palantir?
I mean, like, look, Palantir, in my opinion, is going to be $1 trillion market cap in the next 2 to 3 years. And I actually believe Palantir will probably be the most profitable software company potentially in history as this all plays out. Well, look, when the stock was $15, I get the haters. You can't be bull. At 30, they're screaming. At 50, they're yelling from the mountaintops. At 100, and we'll continue to play that out because it's my view. When you look at the 2 to 3 trillion of spending, 20 to 30% of that is going to be software. There is no one that has the mousetrap, no one that has the algorithms than Palantir. And I've seen it play out in the field. That's why, like, look, 3 million air miles last 25 years, right? It's all about like boots in the ground. So the point is, like, I've seen it from customers. If you look at it just over the next year or two, of course, it's most expensive stock ever. But my view is like, okay, what happens when they go from 3 billion of free cash flow to 10 to 12 to 15 over the next 3, 4 years? Then is it expect like see it's my view like they will grow further and further into the valuation because as the use cases build out, there's no company in the world that could do what they do. That's like it's the same view of Nvidia.
Okay, there, I'm trying to get. Okay, I'm going to hit for the people at home, just so they know what I'm doing. I'm going to hit the company specific questions first. And then after we get through that, I'll hit the macro questions because we're
Good.
getting quite a few macro questions as well.
Okay.
Okay. Okay. So, I see everybody's name here. I know who you are, but I'm not going to call out your name. Don't
Of
worry.
course.
What is your view on App Lovin'?
I mean, they're like we've been very bullish on Apple 11 because it's my view of when I think about use cases and everything playing out on the consumer and on the advertising models and really the transformation, I think App 11 is a core leader in this next phase of the monetization that we're seeing play out on the consumer side. So, App 11 being obviously clearly named, like, valuation continues to be an issue. Many have been skeptical about the model. But Paul, like when our team does the work on App 11, I actually think the stock is being significantly underestimated relative to where numbers go over the next 2, 3 years. And App 11 is a core name that plays into our thesis, despite stock being expensive and obviously having a massive run.
Okay. The next question, the person's asking, what's your favorite robotic stock?
I mean, look, to me, the best robotic stock, look, I like playing it through the physical AI feature. So I love as a robotics playing NVIDIA because I think NVIDIA and Tesla are the two best physical AI plays, especially given my view of Optimus and what Tesla's going to do there. In terms of like, obviously there's a lot of private companies that I work with on the robotic side. There's a handful of public robotics companies, but to me, I continue, at least where we are today, to focus on NVIDIA and Tesla as really the core robotics companies that we're bullish on.
Okay, well, this is not exactly a company specific question, but it is specific. But the guy starts with a compliment. Dan, you are my favorite analyst.
Thank you.
Can you comment on some of the new trends in crypto, especially
Mhm.
stablecoin?
Yeah, I mean, like, look, like we're very bullish on crypto, right? Like, it's our view that like in the regulatory environment we're seeing, this is going to be it's a massive boom for stable coins, for Ethereum, for Bitcoin, and I think what's starting to happen is that it's also cementing our view of blockchain and where everything is ultimately heading. And I think the only now look, there's a massive risk appetite. You'll see, like when you see Bitcoin get sold off, everyone will, will obviously bug out. But I mean, when you start to think about Bitcoin, 250, 300,000, you look at Ethereum in terms of the view, like my friend Tom Lee, and where Ethereum could be, ultimately 15,000. This is going to be a new age when it comes not just for growth stocks, but when it comes to crypto.
Okay, here's another specific question that's not exactly company, but it is specific. The person prefers to invest using ETFs.
Hmm?
So he's sort of like saying, if you want to go for one of these thematic ETFs or, what I mean, not one of the broad
Yeah.
ones, which are the ones you're excited about?
I mean, obviously, there's an ETF based on our research. That's something that definitely obviously that's a big focus of ours. Obviously there's Granny in terms of what Tom does. Look, my view of ETF, like when we did our ETF based all on our research, it's my view you can't. I felt like there's a lot of these ETF. It's like you go through the prospectus and it's like they're speaking a dialect of Mandarin. You're like, what are they even investing in? I think more and more it's very important to have exposure to the themes. I get it in terms of like the Qs and S&P or however you want to play it, but especially when it comes to the AI theme, it's very important not just to own the 4 or 5 names. I think you have to have exposure to what I view as the derivatives, and that speaks to our AI, the Ives AI 30 list. Tom has his own view of it, which is very similar as ours, little different. But, you know, I think more and more investors want exposure to the themes. It's not just about a few names. I agree 100% with that thesis.
Okay, he did ask about one, maybe, I don't know, I'm not actually sure which ETF this is. He asked about BMNR.
Yeah, so BMNR, not necessarily ETF, that's Tom Lee, chairman, that's his plan of Ethereum, and obviously,
Oh,
when
okay.
it's been massively successful. Look, we're bullish on Ethereum, and I think like all the stuff that Tom's done with Ethereum and what Saylor's done with MicroStrategy, I think this is revolutionary, right? I think it's ways that investors are playing the themes, and BMNR has clearly been a massive success.
Okay, I'm not sure this is part of your coverage. Someone's asking for your opinion on Netflix.
Hmm. Yeah, I mean, look, obviously Netflix, we've been positive on for the last decade, right? Look, content's king. They have massive pricing power. I think international growth is still being underestimated. And I think Netflix continues to be a core holding for any tech portfolio. Now, granted, like I don't view it as like an AI play, but to some extent, what I like about it is maybe the non-AI, because you have your AI exposure here, but Netflix being more consumer and content driven, and in a consolidation that's happening across the sector, Netflix, I mean, it's our view Netflix is a stock that goes much higher over the coming years, and that's been the thesis for the last decade.
Okay. Someone asked you, because you made the comment on nuclear power, and so
Aqua, yeah.
someone wanted to know, is there an investable angle to that?
Well, I think Aqua. I mean, to me, Aqua is the best nuclear play out there because Aqua. Look, Aqua is one like what? No revenues today? Like how this stock? Why would you invest it? Because they are so far ahead of other players when it comes to nuclear, from a regulatory, in terms of my view. Look, we're going to need 5 to 6x more power than we have today to fuel these data centers. And I think Aqua continues, in our view, to be the best way to play it on the nuclear. Look, there's other ways to play the nuclear angle. Like, and if you don't want to play the nuclear angle, there's like GE Vernova, right? That we've talked about, and that's in our Ives AI 30. I do, like Paul, I do think that when you think about the AI theme, the power, the grid, the nuclear are those are gonna play key roles in the future of AI.
Okay. For the next question, I'm going to ask you to give a little more detail on how it fits with everything else, because these companies are more new.
Sure.
So they wanted your opinion on Credo and CoreWeave.
So, look, so it's my view, like when you think about like the data stack and infrastructure and where everything's heading, I would also add like Nebius in there, because it's my view like Nebius is actually even a better play than CoreWeave. When we think about the data center stack. Look, this is gonna be at like where we think in the terms of the whole second inning of the 9 inning game. Like these are going to be key components of the build out of the AI revolution. Now I get some of the controversy with them, especially with CoreWeave, but Paul, it's my view like you can't talk AI revolution without CoreWeave, without Nebius. But it goes back to the stack, right? Like, okay, everyone's focused on the chip players, and you're focused on the hyperscalers. But who's here? That that's where they play. Like, in other words, like I just view it as like it's the intestines of a bot. Like they are going to be core components of the build out. And CoreWeave is a good example. If you get caught up in like lockup, vid, debt taking on, it's like it sounds noisy. But I mean, CoreWeave is going to be, what I view as a core player here.
Okay, well, because I made that comment about there weren't many questions, now the questions have exploded. So we still have,
Oh, and
uh,
and also the other thing I'll say is that like, I know we have like a few minutes. If we don't get to any, like, you can hit me on LinkedIn, or on X, Dives Tech. Just follow me and also hit me there.
okay. Okay, let me I mean, because the questions that are good. These are all things that we're all
Yeah.
interested in. Um,
But
so
yeah,
here's the one.
can I
How
tell you
is
one? But Paul, can I tell you like in terms like on the macro side, thematically, like what was the biggest question on the Mac? Is really more around like Trump and tariffs and things like that.
yes,
Okay,
that there were
but
several questions on
about
Trump or
Trump
tariff.
tariffs and all this stuff. Yeah,
And
but
let me give you, I'll just
sure,
grab you one that's a little bit here.
like
Does
all
Dan view
encompassing one. Yeah.
Chinese companies as complementary to the growth of AI or
Yes.
as an adversary?
complementary. I mean, it's always been my view. Like I don't view this as a zero-sum game. And look, that's why we have Chinese plays in our AI 30 and could have more. Because also competition, like when you think about it, think about the DeepSeek moment, even though obviously, like, in terms of a lot of the reality versus fiction in terms of how that all played out. But the reality is the DeepSeek moment was a huge catalyst more for US tech companies to just further hit the accelerator. So China, if I look at everything Huawei's done, they'll narrow the gap. And my hope is when it comes to US China negotiations, that you're going to start to see a little more of that model that you're seeing with NVIDIA. It's a pay for play. And it could be a pay for play on the other side with restrictions from a security perspective. So I believe it is not a revolution, an AI revolution without China. China is going to be a core player. I think across every aspect of it. But let me just hit one thing on the tariff stuff. Look, when all this news comes out, you cannot get caught up in the initial headlines coming out of Trump. You have to understand, like, there's another game. It's all part of a negotiation. So even when it comes to, like, what happened with Apple, right? The worry, like, okay, they're going to get massively tariffed given India, China. Then they play nice in the sandbox, spend more money in the US. Now they have an exemption. That's going to continue on for chip players. You've seen TSMC, I think, play down that model. Obviously, NVIDIA, AMD. I believe tariffs are going to continue to be an issue, but I don't view it as denting growth, denting the supply chain. And I think the bark's going to be a lot worse than the bite when it all plays out. So I don't view. Now, I think at first, when everything hit in early April, I mean, we were freaked out ourselves. We talked about it was a potential economic Armageddon on the doorstep. But administrations backed off significantly. Now cooler heads are prevailing. I think they have a much better understanding of the market.
Okay. Although we were looking for macro as I was spinning through, I saw a question being asked by my boss. So I figured I should ask that one.
Yeah, sure.
So, what do you think about the recent comments from Sam Altman on August 15th in The Verge?
About the
Did he
bubble.
actually mean bubble equals overvalued of AI companies?
Sure. I think what Altman's talking about is saying on the private side that there's some froth and maybe some bubble on some of those. I mean, even if you look at OpenAI's recent valuation, and I think there's no better play out there in terms of everything they're doing, but that's why I think that comment got not necessarily misconstrued, but I think everyone kind of ran with it. And then look, you could see the same thing like Meta freezing hiring and AI. Oh my God, is this it? It just comes down to like these are digestion periods in a multi-year cycle. But Altman is going to be one of the continued golden childs of AI. He's just talking about maybe some components of froth when it comes to on the private side. But I take in nothing more than that. But look, it goes back to like MIT, right? They put out a report like, oh, they talk 95% of the companies see no value in AI spending. People are bugging out from that. Paul, like spending is up 30% in the last 2 months for enterprises, and you only have 4% of U.S. enterprise going down an AI path. You have I'm saying like this is just the beginning in terms of the use cases that are starting to explode, led by names like Palantir.
Okay. Here's a I was looking for macro, but I keep seeing these other questions which are very interesting, right? So I can't help myself.
Sure.
What about quantum stocks such
Yeah.
as
So
D-Wave and yeah.
and Rigetti. I mean, we're a huge believer in quantum. Now look, is the scale there yet? And obviously, going back to Jensen's comments at CES, and those stocks got crushed, and now they've come back. Look, I think quantum is going to be I think quantum is a real sector. Now, look, I believe you got to kind of own the pure plays, ILMQ, Rigetti, D-Wave. I mean, I think you have to own like a hand, but you can't just own one because just given the company specific risk. But I think you're going to have consolidation on the quantum side. Look, the biggest issue on quantum is the scale. I mean, the scale is not there yet, but it goes back to my view of like robotics. I think one of every 10 to 15 households is going to have a robot because of my view of humanoids. I believe, like I said, 20% of automotive is going to be autonomous. Quantum is going to play a key role in the future. But
Okay.
Paul,
Yeah.
it's like when you have the white knuckle moments and you have the sell-offs and you have Palantir down 20% in 2-3 days, there's so many investors that are like, I want to own Quantum, want to own Palantir, Nvidia, and then all of a sudden April when Nvidia goes to $85, you're like, dude, you got to own, like this is the time. They're like, oh, what about tariffs? What about China? It comes down to like the stocks are always going to be, when they're down for a reason, but those are the opportunities.
Okay, I'm going to ask it. So actually, somebody just kind of asked a question right along those lines. Is that he seems to think that there's a correction coming,
Hmm?
right, in the market. He didn't make it sound like he's some
Sure.
bear. And do you kind of like do you have a short-term view like that? Do you think there's you know?
Yeah, sure. I mean, my view is like, especially like the Powell speech tomorrow, like is he a little more hawkish? Like, so there's definitely nervousness this week. Like overall, I definitely sense. So then you have like the Altman comments, some of the Zuckerberg Meta stuff going into Wyoming tomorrow. So look, could you have a correction as we go into like September? Like I think it's possible you could have that, but I don't see anything more like sinister. Like maybe it's like a 5% correction or 3% correction. But my view is like I think it's my view like S&P is is heading towards 7,000 as we go into early next year. So I'm not saying that we don't have little crap, but it's relative to where this going. I think like Nasdaq's on a piece 25,000. But it comes down to like, with these corrections, those are the opportunities to own the names. You don't like you don't kind of hit the exit buttons. And as they always say, like the haters hate, and the bears have missed every transformational tech stock the last 20 years. Because when they're in hibernation mode, look, would I rather be in the left lane of Ferrari going 100 miles an hour in tech? Yeah. Would you get a speeding ticket a few times? Sure. But I'd rather be that than to be in a right lane minivan going to 45 miles an hour with a bumper sticker saying my kid was an honor student in third grade.
Okay, so we've hit the time, but I'm going to ask Dan to stay on for two more questions, right?
Sure.
Because so one, someone asked you kind of to expand a little bit on his thought about the software company.
Mm-hmm.
And then I'll just add to that question what I've been telling investors, and maybe Dan will say, no, Paul has it wrong. And I've been telling people that one of the things about AI, it makes it easier to use software. And therefore, some of the high valuations that we've had for software companies have come from their stickiness with their clients because you have to learn to use it.
Mm-hmm.
And with AI making it easier to use, therefore people are more, it becomes more price competitive,
No,
easier to
Paul, I think
switch.
that's right. Paul, I think that thesis is 100% right. I would also add is that I think software companies underestimated how quickly this was going to change sales cycles. Like, like they're used to a certain model. All of a sudden, it's gotten blown up by companies like Palantir that don't have direct sales forces. And that's why, like to me, like Adobe, they're going to have to do big acquisition. Salesforce, they're going to have to do more deals because it's it's not going to. organically they have the install base, but it's gonna have to happen through deals. Because if you sit on install base, look at Intel. If you look up disaster in the dictionary, you see Intel's ticker. But software, look, I'm not gonna say it's like a code red time for software, but this is definitely like a gut check moment for software companies.
Okay, and then this is the last question. The person wrote it very thoughtfully. It's kind of a big picture question on stock analysis. So I'm just going to read what the person wrote. Um, can Dan give an overview or a framework of how he values the stocks he recommends, like tech stocks, something which most retail value investors find it hard to do so?
Sure, of course. As I always say, if you focus just on P, you miss every transformational tech stock the last 20 years. I look out at the next like 3, 4, 5 years at scale where I think companies can get to. I don't look at Palantir at 5 billion. I look at when they can get to 10 billion and what the free cash flow could be and how we can get there. And to me, you have to be able to look out top down, bottoms up 3 to 5 years. If you look out over the next 1, 2 year in these transformational periods, you don't see the nut, you miss it. And that's my view of like how you miss Microsoft and how you missed Netflix and how you missed, Tesla in the early days. Like if you didn't see the model and where it's going. And I think that's why, like I always said, that's like a lot of bears that own value names. I think that's how they've missed so many of these names, right? But I think we're still, like I talked about, second inning of a 9-inning game. 10:15 p.m. in an AI party that goes to 4 a.m. I'm not saying that sometimes DJ stops playing music, cops come try to break up the party, there's glass in the dance floor, but that party's going on to 4 a.m. And guess what? At 6 a.m., when you meet at the diner, the Bulls had a lot better night than the Bears, who were sitting up in their room reading a book.
Okay. Well, I'm very sorry now if we weren't able to get to your question. We've run out of time. Dan, why don't you repeat
Thank you.
again where you can follow his?
Yeah, follow me on X, Dives Tech, Dives Tech. Hit me on LinkedIn. And yeah, thanks everyone for joining. Paul, thanks for hosting me.
Right. And I'm going to just wanted to say thank you to Dan's colleague, Jay Park, for volunteering him to join us. And I'm going to hand over the presentation to Belinda to say goodnight to all
Thank
of
you.
you.
And any
Thank
shirts,
you.
danivesclothing.com. Thanks.
Thank you, Paul and Dan, for this insightful presentation. For more upcoming webinars, please visit utrade.com.sg. Once again, thank you for joining us and enjoy the rest of your evening.